All right, good morning, everybody. I think we're going to get kicked off. Appreciate you being here. We're going to have some people come through and get admitted here throughout the first few minutes, I'm sure. So, again, appreciate you being here. Steve and I decided to get the band back together last week, and because we were waiting on guidance from April 26th that it was due out, and it just got to be the point that it had just been too long. So we were going to come out this week and go for the reunion tour. And lo and behold, the application, I decided to hold off the invitation until Monday because I sort of heard grumblings that something may be coming out May 15th. And sure enough, we did have the application that was released on May 15th. So we put the invitation out for the reunion concert, and I think we basically sold out within 8 hours. So we really appreciate that. And 80% of you, my gut reaction, if I had to guess, had been here for the first section. So you know, you're returning, and we appreciate that, and it tells us that you got something out of this. So our goal is certainly the same for today. We have a lot of material to get through today, so I'm not sure how this is going to crash and burn at the end, but we'll see. So at times, if we're going pretty quickly, that is by design. So. All right, so our first couple of slides didn't change from the previous. Both Steve and I had our wives give us haircuts, so we look closer to the pictures. I know I still have the same certifications and enjoy the same activities, and Steve, I'm assuming, does as well. So, all right, so at this point, I'll say good morning to Steve Moyer, our co-host. And if you guys have questions, I believe you have the ability to chat into either Steve or myself, and we'll take questions sort of as we go. So, all right, Steve, you want to get the ball rolling here?
All right, yes, good morning to everybody. Glad you're here with us. We have a lot to go over. A lot of things happened this past week, and we'll certainly try to get you up to date and give you the information that you need to know. I'm sure most of you that are on today have received your PPP funding. So I just want to share some information from the SBA website that just came out this past weekend as far as the number of loans and the amount that has been spent so far. So as of 5/16, and this information is on the SBA website, so you can go there if you want more details, but there has been 4,300,000 and some thousand loans made. The approved dollar amount, and these are some big numbers, $513 billion has been approved. The average loan size is 118,000, and loans made under $50,000, 2,764,000 loans, with an approved dollar figure of $51 billion, almost $52 billion, going to that size loan. So they are going to small businesses. Pennsylvania currently has about 20 billion, almost 21 billion of those dollars went to Pennsylvania businesses. So many of our businesses got those loans. One thing that you may have heard, and which is the first bullet point there. These all relate to the same scenario. A few weeks back, Fact 31, FAQ 31, related to large businesses that many were in the news, like Shake Shack. They took the loans and then they, ended up giving the money back because, they're a public company and that kind of thing. So that's what these all related to, and it has to do with the self-assessment of needs, and that one of the items that you certified when you were taking out the loan is that the current economic uncertainty makes this loan request necessary to support your ongoing operations. So the 46 and then 47 gave businesses the opportunity to refund loans if they didn't think they could certify that they met those needs. And also FAQ 31 came out and said that anybody that was taking a loan under $2 million met that criteria, so you didn't have to worry about that. SBA came out and said that any loans over 2 million would probably end up being audited by them. So that was some of that information. We'll skip the third bullet point for now. We'll cover that on the next page. One other thing that came out recently is that the IRS issued, actually, oops, my screen's, there we go. The IRS actually just came out with a notice. It's not a Rev Proc, but a notice 2020-32. And this created quite an uproar that expenses paid with PPP funds are not deductible. Therefore, making the loan forgiveness taxable because they were saying that you couldn't deduct the expenses related to this. This wasn't Congress's intent, and so expect that to change. I don't know why the IRS ever came out with that. It really doesn't make sense. And then there was prepayment greater than 20% of unpaid balance. If you were going to repay more than 20%, you had to notify your lender of this. Brent, if you could move the next slide.
Yeah, that prepayment notice too, I believe is a 3-week notice. So don't wait till the week before. Again, I think you have 3 weeks that they have to be notified, thereabouts.
Okay. The IRS also issued last week, May 13th. So a lot of these things came out last week. There was an interim final rule that originally there was some, on the original application, there was some question as to whether a partner in a partnership could use his guaranteed payments to be considered wages. Some banks weren't accepting this, but they did come out and clarify that if in your original application you did not include or did not get funding for direct, for guaranteed payments, that you could now go back and submit another application to possibly get more, more PPP funds. And then also there was updates on self-employed individuals and how much they could apply for. So that information came out last week or a couple of weeks ago also. And then finally, as Brent mentioned, on May 15th, the SBA issued the loan forgiveness application, which, many of us, that's why many of us are here today to discuss this and find out what's included in that application. So in their release, when they issued the forgiveness, their release was worded that, I'm just going to read this from the release. Today, the Small Business Administration, in consultation with the Department of Treasury, released a Paycheck Protection loan forgiveness application and detailed instructions for the application. The form and instructions inform borrowers how to apply for forgiveness consistent with Coronavirus Aid Relief and Economic Security Act, the CARES Act. SBA will also soon issue regulations and guidance to further assist borrowers as they complete their application and to provide lenders with guidance on their responsibility. So in that sentence, they told us that there is more information coming from them. So this isn't the final word. And just so we're aware of that, there's going to be changes. There's going to be more information coming out. Okay. And all right, that would take care of that.
All right. So where we are logistically, assuming in this phone call, is we're somewhere in the 56-day range, what's called the covered period. So you've received your PPP funds, you're within the 56 days that you have to, in essence, spend the money. And now that's a little bit, we used to have verbiage of 8 weeks or 60 days or whatnot. The application came out and kind of tied the 8 weeks to 56 days because 60 days and 8 weeks weren't quite the same. So I think the verbiage has settled down to 56 days. And then after that 56 days, you are going to have to apply for the lender for forgiveness, whoever serviced your loan. So again, I'm assuming we all know that. One little tidbit is, if you notice, the application for forgiveness was dated to expire on October 31st of 20. So at this point, we're assuming that you have until October 31st to file the application for forgiveness. And we'll get into the timing a little bit later if you want to do it earlier or later. You can apply forgiveness on day 57, anywhere between day 57 and October 31st. So again, we're assuming that that's what that expiration date means. And again, if you don't apply, there is no forgiveness. Those that were funded, you have all the loan documents that spell everything out as a loan. So it is structured as a loan right now. And once you turn that application in, you're going to have, the lender has to make a decision on loan forgiveness within 60 days. So that is a little bit of the timing on what's going to happen. And as Steve mentioned, there's a lot of guidance to come out yet. And overall, our goal for today is really, we met somewhat as a director group and talked this through. The application came out, and my initial gut reaction was, we really got to go over this application. We've got to dive into the application. And we did, and I was kind of like, well, we need to pull back. So we're not going to do any kind of deep dive on the actual application today. What we want to do is get the information out that you understand what decisions you have to make and carry out those actions, and then the paperwork will follow. So there's actual time to fill out the paperwork. It's more important to understand how or what you're doing right now will affect that. So I expect Steve and I will be back for, you know, a third album here at some point in time, and you know, that has a little bit more on the application. I do sort of expect the application to change, hopefully, and you'll see that a little bit as we go through here today. But right now, I don't have to tell you again, communication with both your lending facility and with your accountant advisor. Just keep the lines of communication going. One other thing, anybody that has been my client for any period of time has heard me say, do not let the tax tail wag the dog. And the goal here is not just forgiveness. Yes, you can get these monies forgiven, but you have to ultimately do what's right for your business. So if you spend the money, but you can't sleep at night, that wasn't necessarily the right decision, because you're tight in cash, you can't get to sleep. You know, it may have been the right tax decision, but it wasn't the right decision overall. So again, don't let the tax tail wag the dog. And those that are my clients have heard me say that, I'm sure, repeatedly at some point in time. Just a reminder, the worst case scenario here for any remaining amounts that won't be forgiven is, you know, a 6-month deferral. Your first payment will be due month 7, and that's somewhere in the 10th of the month should be. It will be a 1% rate and an 18-month term. And that 18-month term is what's really going to be a killer. We'll mention this later, but there's changes that could be coming down the pike, and really big wholesale changes, and we'll get into that. But that 18-month term is really what's going to kill a lot of businesses here. You know, so for instance, if you have 50,000 that is left that is not forgiven, okay, well, that may be pretty average. I don't expect the payments to be too high on that. Well, 50,000 over 18 months is close to 3,000 a month. So, you know, usually when loan payments have 3,000 a month, you're up into the 100,000s here. So, you know, so we just have to be careful there. And then one other thing on the previous slide, I forgot to say, it really is going to be hard to achieve 100% forgiveness. And again, we're going to see that later as we go through the presentation here. So if you can get everything forgiven, that's great, but it is really going to be challenging, and we'll show that a little bit later here. So Steve, I'll toss it back to you.
Okay, thanks, Brent. So in case you didn't notice, Brent did send out the forgiveness application in your with the handouts. So hopefully you have that. It is a 11-page document, and there's basically 4 different sections on the loan forgiveness application, and 2 of those are required to be submitted with your lender for the forgiveness, along with other documents. And they did add some new, you know, answered some questions in the forgiveness application, and also gave us some new safe harbors that weren't talked about before. So, so starting out on the slide, there is now an alternative payroll covered period. So this can be used by a client or a business that has bi-weekly payroll or more frequently. So pretty much a weekly or bi-weekly payroll can elect to use this alternative payroll covered period. And so what that does is your normal covered period is it starts on the day that you receive the loan, and it is for the 8-week period, or they're using 56 days now more so than the 8-week period. So this now, this option for the alternative payroll period is if you, let's say you receive your loan on April the 20th, that would normally be when your covered period starts. And with the alternative payroll covered period, you can now elect to have your payroll period start with your next pay. So let's say it's April 27th is your next pay after you receive the funds. You can use that April 27th as your alternative payroll period for payroll only, not for your other expenses, but just for payroll. There's a new exemption for forgiveness for reduction, who have made a reduction in FTEs for borrowers who made a good faith written offer to rehire workers and they declined to come back. Also, another exemption is an employee who resigns, is terminated for cause, or voluntarily accepts a reduction in hours will not count against your head count. Okay. And so that the wording there should be actually requests a reduction in hours. So that would have to come from the employee. And then there's a safe harbor test for companies to be exempt. Yeah, so, and a new simplified method for calculating FTEs. So we'll go through that a little bit later on, but those are some of the changes there. So there's been this discussion on the wording costs paid and costs incurred. And it's actually still a little bit confusing, but they've cleared it up, I believe, on the application. But so I would, on this slide, really what we should do is cross off the and that should be changed to or. On the first page of the application, under the instructions for line 1, it says to enter total eligible payroll costs incurred or paid during the cover period. Unfortunately, on page 2 of the application, under summary of costs eligible for forgiveness, they use the wording payroll costs paid and payroll costs incurred. So it still seems like there's a little confusion on that, but I believe it's pretty much been cleared up that it should be or and not and. Excuse me. And then, so So just a couple definitions here. So payroll costs considered paid. The day paychecks are distributed to the employees, or the day that the borrower originates ACH credit transaction is the day that they're considered paid. And then payroll costs incurred is the day or days that the employee earned the pay. So this distinction allows some flexibility, as we'll see in the use of the funds. So if the wages, you're coming up to your end of your 56-day period and you don't have a payroll scheduled for that day, it's okay, because the payroll would still be eligible to count because it was incurred, as long as it's paid before the next regular payroll date. Non-payroll costs, this wording is also has changed to paid or incurred, and it gives some flexibility again, so that you don't have to have them paid necessarily in that 56-day period. They just have to be incurred. So for example, you may receive a utility bill after the 56-day period, but it was actually incurred. So as long as it's paid on the next regular billing cycle, that counts as paid during your 56-day period. All right. Okay, so just quick reminder of what are eligible expenses, or actually forgivable costs. So your payroll costs, and if you get a chance to look at the forgiveness application, your payroll costs are actually broken down between cash and non-cash. So they consider the payroll, compensation, vacation pay, commissions, that's all considered to be a cash payment. And it has to be, for employees capped at 100,000 annually, or 1923 a week. And that becomes important to keep in mind, that figure, if in calculating weekly levels, to make sure that in some of the calculations, if they're over that on a week, then they count as 100,000 annually for the whole year. Families First PTO and Federal Medical Leave Act do not count in these amounts. Health insurance, retirement plan payments, state and local taxes would be considered non-cash payroll costs. They go on a different line on the application. Non-payroll costs, your rents, on real property and on personal property. So if you have rent on copiers and things like that, that counts as far as a eligible cost. Utilities, electric, gas, water, transportation, you can see is in red. So there's still some question on what's included in that expense. We have seen that gas can be included, but it's not definite yet. Phone, internet, and we would assume that your cell phones also are included in that, as long as they're under your business plan. your business name and not a personal cell phone. Interest on business debts and interest on business mortgages. So not the actual total mortgage payment, but the interest on the mortgage. And all these things had to be in place by 2/15/2020 to count for, so your lease had to be in place, your mortgage, no new items can be included in expenses going forward.
And Steve, I just want to fall on my own sword here a little bit with the items in red. I think there was a little bit more clarification with the application for forgiveness in that, it said employee health insurance, where before I believe it read like continuation of employee benefit plans. So things like life or disability, I was having my clients track, but the application I think is pretty clear and stipulates only health at this point. In terms of rent on personal property being equipment, if you will, postage machines or copiers or things like that, there was, I believe, somewhat of a question there as well. So again, my clients, if you have these things, you're going to want to start including that with your list of expenses here. So.
Right, and that the health insurance, that is, you can have a self-insured health plan. Those payments would also count. It doesn't, any kind of health plan for the employees.
Yeah. But again, I think I was advising any kind of disability or life or vision. I guess vision could go under health.
Vision would count, yes.
Yeah. So we may have to pull a little bit of expenses out there. So Steve, I have a couple questions, I think, if you don't mind. I'm not sure if you have any at this point.
I don't.
No. Okay, so we're doing a good job, I guess, apparently. The one I'm curious about, I have a question from Amy that says, is there a reduction in the FTE requirements for employees for Family First PTO or the Family First medical leave? We know that their wages don't count, but would we think that the FTEs would still be maintained in that scenario, most likely?
I do not know off the top on that.
Yeah, it's a good question. My gut says that you probably should not be penalized for that, if you will. But I'm not sure that either of us have run across anything expressly at this point, right?
Right.
Yeah. So there's still answers, or I'm sorry, there's still questions out there with no answers, like we said last time as well. So, and speaking of open questions, Steve.
Yeah, so there's, still questions on, how much can you include for retirement contributions. That wasn't addressed in these, the application. If you have, retirement plan balance that was accrued from 2019, can you go ahead and pay it and get, full credit in this 56-day period? I would think that you would meet the incurred portion, and you can, it's due during this time. So I would think, you could also pay it and get credit, but that wasn't specifically addressed. And that's, one of the questions that we get a lot. Hopefully they will, come out and answer that as to what can be included. And I've heard other people, doing these seminars bring up that, you know, it has to be also annualized over that period, so you wouldn't get necessarily the full amount. I don't believe that's correct, but anyway, still a question to be answered. I already mentioned the gas for the, you know, is that included in the transportation? We do have some guidance as indicated for self-employed people that it did come out in that guidance. So does that apply to everyone? I tend to think so, but hopefully they will, you know, answer what is included for transportation costs. Trash, I would not specifically mention, but I would think that could be included. Mortgage interest on personal property, there is, you know, business loans, if they're secured by assets, seems that it should qualify. And then on the application that just came out, it looks like owners, health insurance and retirement contributions do not get picked up anywhere on the application. So we need some clarification on that. They also separated out, if you look at the application, owners' compensation from other employees. They really haven't defined, as far as we can tell, who's, you know, considered an owner. Is it a, you know, a 5% partner, or a shareholder in S Corp, or do they have to be a 20% owner? We're not quite sure on that. So still need to get some more clarification. Okay, so there's basically 4 items to determine your forgiveness amount. You have to determine the dollar amount eligible. So first of all, the most that can be forgiven is the total amount of your loan. So that's one of the items that you have to put on the front page is what's the total amount of the loan that you received. It's possible that you received 2 loans, as we mentioned that there was a change for the partners, and in a partnership that could request additional amount. There's a salary reduction calculation. I'm having some issues with my screen here, so sorry about that. It keeps going out for some reason. But anyway, salary reduction. You cannot reduce salaries by 25% or more, which we'll discuss in a little bit. And then there's a FTE calculation, and you need to keep your FTEs at the same, pretty much the same amount as when you applied for the loan. There's some exceptions to that, which we'll discuss in a little bit. And then the wages to non-wage expenses have to be in the ratio of 75 to 25. Now, this was an item that was added by the SBA in their rules, and it was not part of the original CARES Act. So this, there has been, and we'll get into some potential changes later on, but this has been discussed, that the 75-25 ratio might be changed down the line, and it can be changed without Congress because it was not included in the regular bill. It would be more of an administrative item that would be eligible to be changed pretty easily if they decide to do that. Okay.
All right, Steve, I'm just going to knock out a few questions here before we start taking the dive here. Enrique asked if there's any updates on the rumor that the 8 weeks might be elective or extended. Yes, there are mad rumors out there. We'll kind of touch on that a little bit later. Linda asked if Aflac would fall under health insurance. I believe so, Steve, unless you disagree, but it seems like it should.
I would agree that it would.
Okay. Connie asked, I'm a self-employed independent contractor. Will renewal of memberships or fees for my training be considered non-payroll cost as it's part of running my business? I think that's pretty clear based on that short fact pattern that I would say no on that. And again, as a self-employed business operating out of a home office, can the percentage of home office on Schedule C be the same calculation for non-payroll expenses? Steve, I don't know that I've seen anything expressly on that yet, but I'm certainly planning on doing that for anybody that does have a home office. I know we talked about that a little bit yesterday morning, but
Yeah, and I would think interest on a mortgage that's included in that home office would fall into that, and rent, if you had, taking rent as part of that home office calculation, that
yeah.
piece should fall into that.
Okay. What about expenses for setting up employees to work from home, infrastructure necessary to run business during this time? Unfortunately, I don't think they would qualify. If you're a self-employed with no employees, am I counting myself as one employee on the application, or should it be zero? On the application, this again is where I think the application may change because it's not very friendly to self-employed people. Self-employed people, your borrowing capacity and your forgiveness capacity is already predetermined. You may have other expenses. If you don't have any other qualifying expenses, rent, utilities, things of that non-payroll cost, and you do not have payroll, your forgiveness is a straightforward mathematical equation, and I could tell you the dollar amount right now. So again, I think the application may tweak for self-employed people a little bit because we know what the forgiveness is right now, but it's really not clear on the application itself. So Matt, we will not be discussing EIDL grants today necessarily, but we do obviously have information on that. So I would encourage you to reach out to Steve or myself, and we can help you there. Okay. Do you have any questions, Steve, that you want to hit at this time?
No, I don't have any. So you're getting all of them.
Okay. Well, if you want to switch offices, we can do that, and you can have some questions. All right, everybody. I don't know what to tell you. Take a breath because we are about to take a dive here. I am going to start at the 100,000 foot view and work our way down. As Steve said, there's 4 components to the forgiveness. We know that salary reduction and FTEs are part of it. And the dollar amount and the 75-25% ratio are fairly straightforward to understand. So what I want to do is walk you through the FTE calc, but I need to start at the 100,000, kind of work our way down. But you guys you're in for a treat here. So let's get started. So we understand that if you reduce your head count, the loan forgiveness gets reduced. Okay, that's the 100,000 foot view. I think we all understand that concept. Right now, then, as the borrower, you need to calculate your average number of hours paid per week for each employee during the covered period. And again, the covered period's your 56-day period beginning with the funding or again, the alternative period that Steve spoke about, okay? 40 hours equals 1 FTE, full-time equivalent. That is spelled out with the application. That's pretty new. People were thinking it was going to be 30, I don't know, 32, 35, whatever the case, but the application makes it clear that it's now 40. Each employee is capped at 1. So if you have somebody that works 60 hours a week and puts in 20 hours of overtime, it's not 1.5. They're capped at 1. And when you do this calculation, you're going to round to the nearest 10th, okay? So you'll come up with the FTEs during your covered period, okay? But the second bullet point is you will compare that to one of 2 base periods of your choice. So you have to go back and do the same mathematical calculation for either the period of February 15th of 19 to June 30th. So apples to apples, if you will, if on the time of the year, or if it's more advantageous, the period from January 1st, 2020 to February 29th, 2020. So these are the 2 base periods. So again, if you have 7 employees during your covered period right now, and during one of the 2, or say both of the base periods, well, one of the 2, let's say one of the 2 base periods you have 12 employees, the other of the base periods you have 10. You would choose 10 because that would be more advantageous to you. Now you had 7 employees versus 10, so there's going to be a 30% reduction in your forgiveness. So again, I think this makes sense. If we could understand this conceptually. A couple really important things to note is the covered period is taken as a whole, not per week reduction of forgiveness. So originally, I think when the act and the guidance came out, we were calculating, or maybe calculating with each individual pay. That's not the case. You would take these things as totals. So that's a little bit more advantageous. If you had somebody working, whatever number of hours, 35 hours for the first few weeks, and you want to bump them up to 40, you can do that. And it will help your overall calculation and start eating into that period that they were 35 hours, if you will. So this ratio that I just discussed is going to set the forgiveness reduction before the new safe harbor, okay? So I think we understand that concept. So if we move on, the borrower is exempt from losing the loan forgiveness based on the reduction of FTEs if, and this is the new safe harbor, if both of the following happen. If you reduced your employee count between February 15th and April 26th, and by June 30th, you've restored to the FTE level that you had on February 15th, regardless of the previous calculation, you would then qualify for the safe harbor and you would not have any reduction in forgiveness based on the FTE count, okay? So hopefully that makes sense. It's probably a little bit easier to talk through this. There is a new simplified method that also came out with the calculation. You would use the same calculation, but this simplified theory is any employees that work 40 or more hours are counted as 1 FTE. All the others working less than 40, so if you work 39 hours or less, you would be counted as a 0.5 FTE. Now, you can elect to use this simplified method. You don't have to, but this may not be beneficial to you if you have a lot of people between 20 and 40 hour range. But on the flip side, it may be very, very beneficial to you to use if you have a number of employees in the 1 to 19 hour range. So I was talking with somebody yesterday, they have somebody come in clean part-time or whatever, you know, it's like 4 hours a week. Well, that's a 0.1 FTE, but if you use the simplified method, now you're up to 0.5. So again, there may be an opportunity for you to use something that would be a little bit more advantageous, and that's going to be on a case-by-case basis here. If you have reductions of FTEs, you're not going to be responsible or penalized for the following, all right? Any positions in which the borrower made a good faith written offer to rehire an employee during the covered period, or the alternative payroll covered period, that was rejected by the employee. So if you offer to bring somebody back, and right now it's very real, we all know they're probably making more on unemployment with the federal enhancement than they are working for you. Steve will touch on that in a little bit, but you know, if they refuse to come back, that will not hurt you as the employer. Now, the employee is no longer eligible for unemployment, but I guess that's another story or another thing. And then if you have reductions for any related employee issues because they were fired for cause, they voluntarily resigned, or if they voluntarily requested and received a reduction of their hours. And as Steve said, this has to be initiated by the employee to be valid, if you will. Okay, so if there's any of that, you have to factor that into the formula, if you will. So the work that we can be doing right now is we need to calculate the FTEs for all these things, the periods of February 15th to June 30th, the period of 1/1/20 to 2/29/20, the period from 2/15 to 4/26, the individual pay that includes the date of February 15th, and soon you're going to need the FTEs for your 56-day covered period, and the individual pay that includes June 30th. Okay. Other than that, there's not much work to do. You know, for if you followed that and you went through the 80s, you know, we can this is the classic gag me with a spoon type of situation here. So, you know, unfortunately, we were hoping that there was a box on the application that just said, you know, I'm going to check this box and certify that I've reinstated my employees, and I can skip sections 30 through 756 and pick up again with section 758. But unfortunately, there's not. The FTEs count has to be right on the application. So even if you meet this safe harbor and you determine that you meet it, or you know that you have not reduced anybody, you still have to go through all this stuff. So trust me, I can't even imagine. I'm with you guys that are, you know, like, are you kidding me? No, I'm not kidding you, unfortunately. And I feel the same. So, you know, I'm sure you're a little bit nauseous, but we do have some time before lunch to get over it and get on with the second part of the presentation here. So, you know, so again, and you can appreciate, I don't want to go over how to do the paperwork for this, but I want you to understand. So again, we back up, we make it very simple in terms of understanding. You're going to calculate the average number of employees based on a formula that we now know of 40 hours for your covered period. You're going to compare that to one of two base periods. And if you have the same or more, you're in good shape. All right. If there is any reduction, right now there's not a de minimis reduction. So if you had, you know, 47 employees, and during your base period, you had 48 employees, there's still going to be a partial reduction, unfortunately. So I would hope that they'd come out with a de minimis percentage change or something, which would, again, add to this. But right now, it's straightforward. Employees during covered compared to one of two base, and the dates are here, that's more advantageous for you. If you do have a reduction there, then you could still measure based on the safe harbor. And it says if you have a reduction from February through April, but you restore that by June, then you're okay as well. All right, so there's two ways to qualify, if you will. There's two ways to calculate, either straight numbers, 40 FTE, or 1 and 0.5 for anybody under 40. All right. You're going to have to make adjustments for anybody that was fired for cause, voluntarily resigned, or they asked to have their hours reduced and their workload reduced. Okay. So again, you should work with your payroll service and your accountant to start pulling this information together. I will do a little bit of self-preservation here and say, do not call me this afternoon. I think we're going to sit down as a director group on Tuesday and decide how to maybe put all this together. And then obviously we'll start with our payroll service clients as best we can. So hopefully you can appreciate, I don't want to go through the application at this point. I want you to understand, again, your actions and your decisions here, and conceptually understand so you can manage. If you manage, the paperwork will come into play, and we have some time for the paperwork. So, all right. Steve, yeah, go ahead.
Yeah, finally, I have a question that showed up on my screen. So and it kind of relates to what you were just going over. So we'll throw it out there right now and see if we have an answer for it. So if you have an employee that works 4 days a week for 32 hours, can that person be restructured as a salary employee to count as a full-time equivalent? Any thoughts on that one? I'm not sure.
So I'm sorry, Steve, I was getting some questions myself. So you're saying they had 42 hours, but they just want to convert them to a salary?
No, 4 days a week for 32 hours.
Okay.
Can that employee be restructured to be a salary employee so they count as one?
Yeah, the fact that their salary really doesn't equate to a 1 or a 0.5 or whatever, you're still going to have an hour's work type of dynamic. And I know a lot of people are salary, you know, we see them on our payroll service, obviously. So I think you are going to have to assign hours to that salary person, if you will.
Okay. All right. Anything else you want to answer before we move?
I think I was getting slammed with questions, obviously, as I was going through that. So just give me a second to page through here.
So while you're looking at those, let me just make a comment to everybody that's on the on right now. There's a lot of math involved here. I mean, it's extremely complicated. We do have Excel spreadsheets that are going to help us with these calculations. So, I mean, I think a lot of people on the Zoom call today, you know, you're going to have a number of employees, and there's going to be different scenarios that we have to run through to get you the best benefit, and we can do that with some of the Excel the calculators that we have. It's really going to be tough to do it, longhand, I think. So just to keep that in mind with some of these calculations, it's really tedious and a lot of math involved.
Yeah, Steve, I have a question from Lynn, and if I had an award to hand out, I would hand it to her because it's a really, really important admission on our part. Says, can payments to vendors who provide temporary employees be included in the payroll forgiveness calculation? The answer there is yes. I think you're probably going to have to force it in the same hours and pay issues, but yes, please everybody remember that temp service employees will count towards your payroll cost. So really good job, Lynn. Nate, your question, again, it doesn't matter. So hopefully that will clear that up. Yes, this Michael, he might have left. He says he has to, but will this be recorded and distributed? Yes, it'll be on our website.
You usually send that out afterwards also, don't you?
Yeah, we'll send an email out to redo it. Stephanie, I'm going to look at yours later. That it's a little too lengthy here to hit right now. Amy, again, maybe I'll give you an honorable mention. Amy says, what if the loan application used 30 hours to calculate the previous FTE? So the answer to that is the loan application doesn't matter, apparently, because you're going to bring in all the applicable math at the same formula here for forgiveness. So that number of jobs that was on the application, I would say I have absolutely no idea what that number was for, other than to look at the 500 employee cap that was out there in associations and stuff like that. So your math here is what is going to be determine the forgiveness based on whatever other method you used for the application or anywhere else through the process. Yeah, Chuck, we did this. Do I need to complete the FTE section even if nothing changed? Yes, unfortunately, as it is right now. Is there only info guidance about people that only work here and there, like substitute teachers? Excuse me, again, if they worked for a day, you're going to count them as either, a 0.2 FTE or, a 0.5, depending on what math or, equation calculation you use. Let's see, Sue, we calculated our original FTEs on the loan with 30. Yeah, we answered that already. It's based on what we know now, the forgiveness. Anything you've done before is not going to matter per se. Yeah, so one other thing I think Amy is getting at, does it have to meet the FTE level at any time before 6:30 or be at that FTE on 6:30? And Steve, our understanding is be at that FTE on the pay that includes the 6:30 pay date, or date, if you will. There has to be some anti-abuse guidance that comes out, because we said this back, at the beginning of the process, that, people are just going to go out to the corner and hire everybody on June 26th for a week, and then they'll meet their FTEs with that payroll and then turn around on July 1st and lay everybody back off. So there has to be some kind of anti-abuse guidance that comes out, I think. So I have a few more questions, but Steve, I'm gonna turn it back over to you.
And Brent, to that point, yeah. And even if there is no guidance that comes out, I mean, it's going to come. You know, if that is audited, let's say, what was the intent there? You know, you're bringing them back, and then laying them back off. That's really going to be an issue for anybody that does that. If it comes up, and whether the bank audits it, SBA, that's going to be a problem. So we won't advise you to go there.
Yeah. Okay, Steve. So we're at 10 after 11, so we got 20 minutes left. So just keep our eye on the time.
Okay. So one of the other potential hurdles that you have to get over to get the full forgiveness, or that could reduce your forgiveness, is the reduction in salaries or wages by more than 25%. So, and this only applies if you had employees that were under the $100,000 limit. Anybody that was over the $100,000, they won't come into play for this calculation. So theoretically, if you had somebody that was at 105,000 and their pay was reduced to 75,000, that's not going to come into play here, even though it was reduced by more than 25%. So there's actually two tables on the application. One for those that are under 100,000 and one for those that are over. So on the slide here, I'll just have to, oh, it was changed. Okay, Brent. On the screen, your slide is changed. On the handout that you received, the wording was the under table. So it's highlighted in yellow so you can see that change. So what happens here is you have to calculate, you take your salaries that were paid to employees between January 1, 2020 and March 31, 2020. So the first quarter of 2020, and compare that to your average salary during your covered period. Okay, the covered period is your 8 weeks, your 56 days. And then you would compare that and see if there's a 25% or greater reduction. And you do that the same for salary as you do for hourly employees. All right. Reduction is based on the dollar excess of the annualized reduced salary that exceeds the 75%. And then you de-annualize it to 8 weeks. So that's not quite as complicated as the FTE, but there's still math involved, and you got to do it for those different periods of time.
Yeah, Steve, I would say the math is actually worse on that one. You know, the articles that we were reading, you know, have 5 to 7 steps each to do all this, you know. So again, we just wanted to get the theory out there so people can understand. If you reduce more than 75, more than 25%, so if you reduce somebody to 70% of their salary, that 5% difference is what's really going to hurt you. Again, you have to go through and annualize it, de-annualize and everything, but you know, again, that's the theory.
Right. And again, yeah, so it's going to require, like you said, the slide, there weren't as many slides on that area, but the math is very complicated on all of these, you know, reductions, and you have to run through the calculations.
Yeah, quite frankly, there's not the same number of slides because it was really hard to put into a slide. This is, again, a little bit more complicated after you understand the theory. It becomes complicated to put on paper, if you will.
Okay. So here's a, you know, again, you have a, you can cure or fix a situation by restoring your employee's pay level by no later than 6/30/2020 and get a exemption from this reduction. And it had, you know, the pay level had to include the February 15th of 20 period that you're going to restore it to. Okay. Some things to do now. You want to go back and make sure you know who has earned more than 100,000 during any single pay period. So remember that amount, the single week was $1,923. So anybody that earned more than that during a pay period during 2019 falls into this $100,000 category, and then they don't get included in that 25% reduction. All right. And you can go back and start calculating employees' average salary for the period for the first quarter of 2020. And, you know, you should be able to get that from your payroll reports for the first quarter of this year. All right, there's some more details. Calculate the annualized pay for the period including February 15th. You know, and you can see all those dates. So you want to start calculating that, and you know, if you can, you know, bring back those employees to that you know, as of 6/30/20, bring them back, and you can fix the 25% reduction.
All right, Steve, I do have one question I think is a little timely. Sue is asking if the company's under the governor closure order, employees are on unemployment during the covered period, we cannot count any money they received on unemployment. Sue, you can't count their unemployment earnings anywhere against your forgiveness. To state the obvious, the problem you have is you're not paying your employees to sit at home and do nothing, obviously. So you can't spend the money on payroll, but you may be able to have it forgiven. if you open up June 26th, let's say the governor opens up June 26th, well, you'll restore everything, but you still haven't spent the dollars. So it cuts both ways, if you will. And then there is, like I said, vicious rumors out there, which we'll touch on real quick here before we end, that June 30th date is going to be pushed because it physically it doesn't work, especially in Pennsylvania here in our area. So, Steve, if you have any questions before I.
No, I don't have any new ones, so go
Okay.
ahead.
All right, so again, my thoughts on the forgiveness is, again, note that the salary reduction measurement is by the full period and not by individual pay. So again, when this first came out, we were looking at somebody, if they had their salary reduced to individual pay, that individual pay amount would have to be counted. That's not the case. So you do have time to pay your employees and get kind of caught up if you want, and we'll have some ideas in a second with the planning, and it would be helpful. Again, we said there has to be some kind of anti-abuse coming out, you would think, and here overall getting the full loan amount forgiven is going to be challenging because, again, you borrowed based on 100,000. Let's take a salary of 100,000. Your borrowing was based on strictly on payroll. Well, you took that payroll, divided it by 12, multiplied by 2.5. So if we just take 100,000, you add 100,000 in pay, divide that by 12, and I'm going to multiply it by 2 instead of 2.5 to make it equal to the 8-week period. You've borrowed capacity of 16.6, but they are only allowing you a forgiveness of 100,000 divided by 52 times your 8 weeks. So they're only going to allow the forgiveness of 15.3 on that 16.6. So again, you have the 0.5 month if you borrowed, which has to be paid by rent or something other than payroll. But even within the payroll, you have a little bit of an issue here as well. So, and then the last thing is, if you really look at the application, it's currently drafted that the non-payroll costs are going to be affected by your FTE reduction quotient if you have it. So again, there may be some tweaks coming to the forgiveness application, hopefully. Really quick, the banks, this is in the interim final. Can the lenders rely on borrowed documents for loan forgiveness? And this is straight out, it's a quote, yes, the lender does not need to conduct any verification, so on and so forth. The administrator will hold harmless, from the borrower. So you, the borrower, are going to have to give an accounting and certify under civil criminal penalties, which again, we'll talk about just real quick here in a second. But again, the idea here is the bank does not have a lot of work to do. Now, that's not to say that they're going to want documents. There are documents here that are expressly stated on the forgiveness application that the bank will need, but hopefully they don't go far and above this. If we go back to the beginning and reminisce about the beginning of the process, the loans opened up within 2 weeks, and the banks really got blindsided here, they wanted to underwrite everything. Their initial gut reaction is they wanted to underwrite everything. So we had banks asking for receivable reports and retirement plan reports and 5500s, which is your retirement plan tax returns, and all kinds of stuff that actually made absolutely no sense. And to give them credit, most of them took a breath over the weekend. I'm sure they worked Saturday and Sunday. They can, confirm that very easily. But most of them then did, come out Monday and or Tuesday and, really pared down their documentation. So the advantage on this time is they have some time to think about this and really come out with the list that is going to be individual to their bank. So I don't see this as being as big of an issue this time around because we do have some time to think about it a little bit more. So as I explained, you're going to have to build an audit file for the bank. So every time you have a payroll, you're going to have to stick a payroll register in that report. Tax forms, any tax returns, payments or receipts, canceled checks, bank statements, anything to prove that you spent that money on electric, on water, on gas, on whatever. You'll need to get a copy of the canceled check or the credit card statement, something in the file that will document that expense. There'll be something in the file when we figure it out for the FTEs and stuff like that. They may want the whole lease agreement for the rent. They may just want a couple pages to establish amortizations on the interest, because again, principal is not eligible forgiveness, but the interest is. So they'll want some kind of amortization statement and such. There are records that do not have to go to the bank that are expressly stated in the forgiveness application. Worksheets for your FTE and your salary reductions, documents, of the job offer, firings, resignations, things of that nature. The bank's not going to need this. They're going to be able to rely on your statement, if you will. So that's not to say that the banks may require more documentation, but again, I think it's going to be a much better experience this time around because we have some time to give some forethought to it. I say we, like I'm involved with it, but they. So important to note that any of the documentation for this process, for this loan, has to be retained for 6 years, and that's a little bit different. If the IRS is going to audit you, they have to initially initiate the audit within 3 years of your filing date generally. This is 6 years, so it's a little bit different. And I don't expect anybody on this phone call, but if somebody would get audited, the audit would be much more through the SBA and not the IRS. And this application for forgiveness and such, you're signing in subject to civil penalties and potential jail time. So, lawyers can give a whole hour presentation on how scary this is, and I don't want to discount it, but realize that this is a little bit higher threshold than a tax return representation. And if you do unfortunately get audited, like literally the first thing I think I would agree with, we heard in a webinar the other day, is to hire a litigation attorney at the very beginning. Not just an attorney, but somebody who would litigate. Again, because this is going to be a little bit different of a process. So again, I don't think anybody's going to have that, but just in case, keep it in mind. So Steve, you want to take us home here?
All right, Brent, you just scared everybody. I think they're signing off real quick here.
Okay.
No, yeah. So that is something to keep in mind. But just remember, if this has happened so fast, there's not a lot of guidance. As long as you're making a good faith effort to comply with the requirements, you should be fine. So don't, you just want to do the best that you can to build that file of documentation. So on to some planning opportunities. So, we already mentioned you want to bring employees back by 6:30, June 30, 2020, if you can. There may be some opportunity to give some of your employees bonuses during that time to get your pay up. If there's employees on unemployment, you might, have to, incentivize them some to come back, or or hazard pay, however you determine it. But that could be certainly included in your consideration and planning to get the forgiveness. Your full-time equivalents, remember, they're capped at 40 hours. So anybody working more than 40 hours and earning overtime doesn't really help you for the FTE calculation. It actually goes the other way. You could be using some of those hours to get, a lower hourly, or a person that works lower hours to get their hours up, and get them to use some of those hours. Over document non-payroll expenses. There's certainly a possibility that the 75 payroll and the 25 non-payroll test, as we mentioned, that could get changed. And we'll discuss that in just a little bit. There's something in the next round of potential, stimulus regulations, so that's certainly a possibility. Do you want to turn in the application for forgiveness early, or do you want to wait till later? Couple thoughts on both. There's a possibility that you come to the end of your 56 days and you do the calculations. And based on the way the rules are right now, you get full forgiveness. So is there a reason that you would want to wait till additional regulations come out and potentially change what what you're getting? If you turn it in early, you have full forgiveness. That probably is a good thing to do. On the other hand, as you can see down to the last bullet point, there is a payroll tax deferral available. So that's on the Social Security part, the employer's Social Security part of tax, the 6.2%. You are eligible to defer that through the rest of the year, potentially, or if you have a PPP loan, until forgiveness is given. So if you want to take advantage of the payroll tax deferral, you might want to push off waiting to submit that application until as late as possible. Remember, Brent said early on that the application had a expiration date of 10/31. So if you wait till the end of October, submit your application, the bank has to get back to you within 60 days. You're close to the end of the year, and you're taking advantage pretty much of the full deferral that's available. So you might want to wait. Okay. The paid or incurred, we kind of discussed that already, but you should be able to get, you want to make sure that you get all of your incurred expenses into that application. So you might have to wait a few weeks until after the end of your forgiveness period, or your 56-day period, to submit the application to make sure you have all those costs included. All right. And I see we're getting close to the end of the time, so I'll kind of try to get through this and hit the highlights here. So right now we're in phase 3 of pandemic relief legislation. And also last week, on the 15th, May 15th, I think it was, or the 16th, Congress passed the HEROES Act. So it made it through the House. and it's going to move on to the Senate for their review. There's some things in there that would, certainly we know it's not going to pass the way it, the way it was drafted, but there is some things in there to consider when looking at the PPP plan or loans. They have something in that could extend the 8-week covered period to 24 weeks. Or even there's some talk of to the end of the year. So through December 31st, there's some safe harbors who cannot rehire during the covered period because the businesses were closed down because of, the government's order. There's clarification that those expenses that we said the IRS was going to deny, they would make that tax deductible. And then removes the requirement that not more than 25% of the loan forgiveness amount can be for non-payroll costs. So, there's, let's see, what else is, extends the maturity date for the PPP loans to 5 years, and possibly, enhances the use of the retention credit to go along with the PPP funds, because currently you can't use those. So again, here's some other things that both President Trump and Mnuchin also mentioned, that they would get rid of the 8-week period, extend the June 30 deadline, 75-25 test. So some of the same things they're saying that coincides with the HEROES bill. Excuse me. Let's see. Yeah, I think there's, some of these things, Brent, I think we can just skip for now. They're for another time. There might be another round of stimulus payments coming out, but all that's kind of up in the air. So there probably is a fourth phase coming. It's just when and how much. One other thing I forgot to mention early on, that there is still PPP funds available. So if anybody's on this call that hasn't gotten their loan yet, you can still apply. There's more funds available. So. Brent, do you have any questions? I have a couple here that, if we want to try to answer some real quick.
Yeah, I think for the presentation, the only last thing I want to say, and I forgot, this is really kind of important, is for your files, it's probably a really good idea to document what made you uncertain that you needed or necessitated the loan. And that can just be a paragraph, a one-pager or something, but again, reminder that you made the certification under criminal penalty and jail time, that economic uncertainty made this loan necessary to continue ongoing operations. So right now, while you're in the middle of it, it's probably a good idea to stick that in your files. And again, that would help you document that you needed this in case of a audit. So,
but Brent, if the loan is under 2 million, that certification is already kind of
safe harbor. Yeah,
kind of made. But yeah, it certainly doesn't hurt to put that in the file also.
Yeah,
pretty much anybody that was under 2 million in loans, they were considered to have made that.
Okay.
certification.
So I think formally we'll conclude the presentation, but Steve, you said you had some questions. So if anybody submitted questions and want to hang on, we'll hit them here real quick as best we can. But otherwise, we thank you, and I'm sure Steve and I will be back for round 3 at some point. So hopefully keep our eyes out. So thank you, everybody. If you have a question, submit it. We can stay on if you have time and go over that. So go ahead, Steve.
Yep. Thank you, everybody that attended, and we'll answer a couple questions now. There's one here that I have that says, can we give a bonus that would be okay to count under the payroll costs for this spending for employees that have been working through the closure? I certainly don't see anything wrong with that. As we said, it could be considered, hazard pay. They're going out and working and potentially exposing themselves to the disease. So you certainly have a reason to give them a bonus for that. Absolutely. Any other thoughts, Brent?
Yeah, I've been advising my clients, really, maybe you may want to consider not calling it a bonus, but something else, because I don't know that you want to get generous with somebody else's money right now, but it certainly is valid, again, that you have this competition with unemployment, or you have people working even in an office under hazardous conditions, if you will. So I think if you can call it something different, I think it's very valid. Bonus just, again, just the connotation of somebody coming in and, oh, we gave a bonus, with somebody else's money to get it for free. That's the only thing I would suggest.
Yeah, at this point, there is no regulations or any guidance out there that says that you cannot. It is reasonable, I think, to be able to do that. That's all I have, Brent. I don't know if you have any others.
Believe it or not, I do not. So I think we're pretty well through. So, okay.
Yep. If anybody comes up with anything, after you think about it, please don't hesitate to contact either Brent or myself.
All right, everybody. Appreciate it. So thank you, and hopefully we'll talk to you again in the near future.
Bye.